Demand is quite strong at the moment. We've seen that in a couple of ways. If you look on our site, buyer inquiry is up 15% in the half on the prior corresponding period. So there's a lot of buyers in the market, and that's driven by fundamentals such as low unemployment and immigration. And in that market, sellers are feeling confident to bring their properties to market. And so we're seeing days on site, for example, well down on the corresponding period last year.
Are you seeing diversity across the capital cities? Sydney and Melbourne were highlighted in particular.
Very diverse, actually. And the first half, national listings were up 4%. But within that, it was Melbourne and Sydney up in the high teens, and Brisbane, Perth and Adelaide actually down. And what we're seeing there is Melbourne and Sydney led us into the downturn when interest rates started to go up in the prior year. And Melbourne and Sydney have definitely led us out. We think there was a lot of pent-up demand for sellers in Melbourne and Sydney. Slowly but surely, the other markets are recovering. We note that in this half, Brisbane has already turned to positive listings. We expect Perth and Adelaide to follow.
A recent feature of high property prices has been low stock levels. Are you seeing that turn?
Yes, sellers are bringing properties to market, and as I said, that is due to the demand. So there's a lot of availability to buy a property. The part of the market that's still quite distressed is the rental market. Rental vacancies are at all-time lows, and you're seeing that anecdotally with open for inspections for rental properties with dozens of people turning up. Perversely, we are seeing that as a benefit in our flatmates business, where people are starting to reform share accommodation because they just can't find rental accommodation.
Are you seeing any evidence that the increased supply is being driven by forced selling, given the restrictive interest rate policy that we have at the moment?
No, there's very little evidence of what I would call distressed selling. I think consumers and banks are working much better together. If a consumer is feeling mortgage stress, I think the banks are being a lot more proactive about helping out consumers now than they used to be in the past. And I think consumers who are feeling mortgage stress are taking action before they're being forced to.
The Governor of the RBA, Michelle Bullock, hasn't ruled out another rate rise. Do you think that could dampen sentiment?
I think most economists are saying no more rate rises, or at worst, one. And I think any rate rise is most likely to be 25 basis points. I don't think that's going to put the market off. I think if it happens, the general consensus is we're probably likely to be at the peak. I think we're in a pretty benign interest rate environment for the remainder of 2024, which I think will underpin a very healthy property market.
Well, your bottom line number took a hit because of your overseas venture, Property Guru. Can you tell us a bit about that?
Yes, we reduced the valuation on our books for Property Guru. It's a reflection of basically the Malaysia and Vietnam markets. There's been a government intervention in Vietnam, which has reduced the transaction volumes there. And so we've reduced our growth assumptions for Vietnam, as we have done in Malaysia, more based on economic factors there.
Well, investors don't appear to love the outlook delivered today, marking down the share price.
The share market is still digesting the result, I think. We've had a pretty good run-up. I think the market was expecting a good result. I think we delivered a good result. It's a small percentage movement for us.
Owen Wilson, thank you.
Thanks, Alicia.